Good morning, everyone, and thank you for joining us on this EDC Coffee Chat, Coffee with Colleen. We appreciate your time, and we hope today's presentation will be of value to you and your businesses. We have today a conversation about the Employment Retention Credit Tax Rebate. And we have a few different speakers lined up. First off, I just want to do a few housekeeping items, and that is if you are not on mute, please put yourself on mute so we don't inadvertently hear some background noise. And if you have any questions for the speaker, any comments, you can either raise your hand or put it in the chat and I will call on you. So with that, I am happy to introduce my friend and an executive with the First Fed Bank, which everybody knows is headquartered in Port Angeles. So Danya Scarano, welcome to our little coffee chat this morning, and please take it away.
Well, thank you, Colleen. Good morning, everyone. It's a pleasure to be here today. As Colleen mentioned, my name is Danya Scarano, and I'm with First Fed Bank. I've been there over 38 years, so I feel like I've pretty much been a part of the history of the bank in the community. I'm here today because I'm really excited to talk about a partnership that we believe will help businesses in our communities have access to some government credits that they may not have been aware of. So Colleen mentioned the Employee Retention Tax Credit, or ERC, is intended to basically incentivize businesses who kept employees on the payroll during the pandemic. And I know a lot of you on this call today struggled to do that, and have had a tough couple years. And this program is designed to help businesses in that situation. Originally, ERC was intended to be given you could either get PPP or ERC, but you couldn't get both. Well, that changed in the last year, and now businesses are allowed to claim ERC in addition to PPP. So this is really great news, and it's something that First Fed wanted to be a part of in sharing the news, getting the word out, and making sure that our businesses and our communities knew it was available. So we partnered with a company called Innovation Refunds to help us with this program. They specialize in helping identify and unlock government cash incentives, and really are the experts with ERC. And Colleen, you had mentioned, some of the guidelines and some of the questions people may have. So joining us today, James Lee from Innovation Refunds is going to talk more about ERC, the process to apply, which is really quick and pretty painless, and answer any questions about the program, do a program overview. And then I'm here on the call too to answer any questions that you may have about the bank and our partnership with Innovation Refunds. But really the details are going to be provided by James today. So I'm going to turn it over to James because I'm sure he has more of what you're looking for. James, good morning.
Yeah, good morning, and thank you so much for that introduction, and thanks for having me here today, Colleen. This is really fantastic to get to be a part of this Wednesday morning coffee session with you all. So just happy to be here and really excited to talk to you, everyone, about ERC. So I'm James. I am the RevOps manager with Innovation Refunds. Really what that means is that I really focus on the operations behind our partnerships. Our partnership with First Fed is really important because when it comes to ERC, this is a program that the IRS, when they built this program, they intended 70 to 80% of all small to medium-sized businesses to qualify for this program. The fact of the matter is that a small fraction of those businesses that do qualify for the program have applied for the program, let alone have even heard about the program. So we've partnered with banks like First Fed to get the word out and become sort of evangelists for this program. The big risk here is that the government has literally made billions of dollars in payroll tax refunds available to small businesses, but this program is expiring, and I'll go a little bit into exactly what the expiration date is on this program. But the risk is that those billions of dollars will stay inside of the government's hands instead of flowing to our local businesses and our local communities. So that's really what I'm here to do today, is to let everyone know about this program so that everybody can get the payroll taxes that they've already paid refunded to their businesses because they were able to retain their employees during the COVID crisis. Does that sound good, everybody, so far?
Yes, yes. Thanks, James. And when you finish up, I do have some other things to share in regard to this. And I just want to say we have a lot of different entities throughout our community that offer, support our businesses, the CPAs and accountants and such. And so Innovation Refunds is one source that you can go to help you get, as a business owner, process this federal tax credit. Thank you.
Yep, that's absolutely right. Great. So I'm going to go through a very short presentation here, and then we'll just dive in.
Great.
So I'm going to go ahead and share my screen. Yep. Sorry. Go ahead, Colleen.
All right. I will. Do you want me to share it, or do you want to run the slides?
No, if you'd like to share, that's totally fine. Yeah.
Okay.
Perfect. Yep. So Innovation Refunds, that's my company. These are just some examples of the companies that we've done refunds for. We'll get into a little bit of what the average refund can expect, but what these refunds are based on are the number of eligible employees that you were able to keep on payroll in both 2020 and 2021. We've seen refunds as high as $6 million. So really, the limit is based on the number of employees that you've had during that time period. So if we go to the next slide here. So exactly what is ERC? It was born out of the COVID relief bill, the same exact bill that created PPP. Now, as mentioned before, when the government first came out with this program, you could only claim either PPP or ERC. And it was a similar story throughout the life of ERC, in which when it was born, it was sort of like a little stepbrother of PPP. But since the government was seeing that people were so underutilizing the ERC program, as the program went on, they kept on expanding out the eligibility criteria. So nowadays, the qualification criteria is extremely simple. There's two essential qualification criteria for ERC at this point. The first one, and the most important one, is, have you had operations that were impacted due to COVID-19, resulting in the limitations of commerce, the limitations of travel, the limitations of group meetings, or any type of impact to your operations. Now, that is the criteria that most businesses will qualify for, because if we look at that 2020 to 2021 time period, what business didn't have to change the way that they did business because of the shutdowns that occurred during that time period, right? The second criteria is an or criteria. So it's, you've either had this impact to your operations due to COVID-19, or you've experienced a significant decline in gross receipts during any calendar quarter from Q1 2020 through Q3 2021. So this is another misconception that most businesses believe that they need to have experienced a gross decline in gross receipts. That's one of the criteria, but it's not the only criteria. The next section here is, we make accessing that refund easy. So Innovation Refunds has built out proprietary technology to help you get your documents in order. We have engaged a extremely specialized tax team of both attorneys and CPAs to process your refund, and also to maximize the amount of the refund that you get. So the attorneys and the CPAs actually go through your payroll forms during those quarters to ensure that you're getting the maximum refund possible. Great, and I think we can move into the next slide here. Perfect. These are just our reviews on Trustpilot. What we really pride ourselves on is a white glove service because we're dealing with a lot of money here. This is your money that you're getting as a refund for your payroll tax rebate. It's also a fairly long process. So the IRS processing time right now is about 5 to 8 months. We want to make sure that our clients are keep being kept up to date during that entire process, that everyone knows where everything is at every point inside of that process. And really, customer service is our #1 priority here. So you can check us out on Trustpilot. These are just some of the reviews that we get. Very oftentimes, really every review really calls out a specific team member over at Innovation Refunds because it's really the goal of us to provide you with a personalized white glove experience. So you're going to have a dedicated refund specialist as well as a dedicated client success champion that will be working on your account and will be available for phone calls really any day, anytime. And here are some of the statistics here. So some of the key metrics for Innovation Refunds. Right now, we have in processing 8,752 refunds. So we have a fairly sizable operation. This is the only tax credit that we work on. So we're extremely specialized in processing this refund and maximizing this specific refund for our clients. The average refund that we claim per client is $380,000. So if you're in this room, the average will be about $380,000 that you're able to get back in payroll tax rebates.
So I'd like to say, James, the businesses in Clallam County, by and large, are very small businesses.
Sure.
And one thing I want to mention, and I bet it's a question out there, is that if you're a sole proprietor or if you have employees that are family members, that those are not qualified. That payroll is not qualified payroll under this program, correct?
That's absolutely correct. Yep. So the sole proprietors and the family members that are working inside of business, unfortunately, do not qualify to have their payroll tax credits refunded.
Yeah. Okay. Thank you.
Absolutely.
We have
Great point.
6,700 businesses in our county, but the vast majority, don't even have employees or are just family members. So, that it's a much smaller subset, I think, in Clallam that this program would work for. But we really do want to try to ensure that those that qualify do know about this and have the opportunity to apply. So with that, thanks, James. Go ahead.
Absolutely. That's a great clarification. Great. And this just goes into a little bit of our proprietary technology and our processing advantage. The application process is extremely efficient. I can send over a link to Danya with the intake form that we have with First Fed right now, but it's actually a fairly simple initial qualification process. After that form is processed, we ask for some basic information like your company name, how COVID-19 has impacted you. It helps us start building the narrative for that application. Once we have that, we qualify you right off the bat on whether or not you likely qualify for ERC. There's no upfront cost, no upfront fee. We qualify you completely out of our own pocket there. And then afterwards, we send you a message about whether or not you qualify. And we also provide some education on exactly what ERC is and what to expect later on inside of that process. Once that data collection occurs, we have a couple of technology pieces that make the process a lot smoother. So we provide an upload portal that will allow you to keep your documents organized. We also ensure to keep the data extremely clean as we're processing this information. And we're making sure that the data itself is extremely safe. So our cloud-based technology follows all the strictest guidelines when it comes to data privacy. And then once that submission is then sent over to our tax team, unlike a lot of other firms, we use attorneys and CPAs working together to review each application and to make sure that not only is the application being maximized, but all the T's are crossed and the I's are dotted. And
So,
I'm sorry, go ahead,
James,
Colleen. Yeah.
very quickly, Priya has a question in the chat. She says, can nonprofits take advantage of this tax credit, and how do part-time employees versus full-time employee status impact the credit?
Two fantastic questions. So nonprofits can in fact take advantage of this program. And unlike PVP, charities also can take advantage of this program. So a great, more inclusive program than PPP was. To your second question, part-time employees can also take advantage of this program. So yes, absolutely. So any payroll tax that you paid on part-time employees can also be applied for a refund here.
And I see Bill has his hand up. Bill?
Yeah, I was just sending a chat. What is the tax credit? I'm a sole proprietor. I have employees. And so the question is, even though I am a sole proprietor, I am paying employees, employee federal tax, blah, blah, blah. I assume that the credit is available for that payroll, not my
Yes.
payroll as a sole proprietor. But what is the basis of the credit? Is it a percentage, or is it a set amount per employee? What is it?
So it's a limited amount per employee based on the payroll taxes that you paid. So for each eligible employee, there is a set amount that you can claim for that employee. In 2020, for the entirety of 2020, you can claim up to $5,000 per eligible employee in a payroll tax refund.
Is that based on the salary, or is that based on the number of the employees, period?
It's essentially based on the amount in the payroll tax refund that you paid. So whatever you paid for that employee can be refunded up to $5,000 for the entirety of 2020.
So it's the payroll tax that you paid that employee is what's eligible, really, up to $5,000.
Exactly right. And that's for 20. Yep. Sorry, go ahead.
It's what you submitted on your 941, right?
Yeah, yeah.
IRS form
Absolutely right.
941 for those
Absolutely
that
right.
have payroll. Mhm.
Okay. And
Yep.
then can we claim this refund through our tax return? I haven't filed taxes yet this year. So we'll be preparing our taxes between now and August. And is this something I can just claim through our filing?
Yes. So you can talk to your tax attorney about this. What they would file is a 941X, which is an amendment to your 941 over those past over 2020 and 2021.
Okay, but it includes 2021 as well?
Yes. So for 2020, it's $5,000 for the entire year per eligible employee. For
Right.
2021, for Q1, it's $7,000 per eligible employee.
Right.
For Q2, it's another $7,000 per employee. And then for Q3, that's another $7,000 per eligible employee. The program was actually ended in Q4 of 2021 because it was being so underutilized. So the administration actually ended the program early because so few people were using it. That still leaves $26,000 per eligible employee. But it also means that since you only have 3 years to amend your 941s, there is a bit of a ticking time clock on the shot clock right now, a little bit, right? So 3 years from 2020, that's 2023, that first year will begin to drop off. And then into 2024, the 2021 quarters will also begin to drop off.
Okay, great. Thank you very much.
Yeah, absolutely. Yeah, well, that's a good way of putting it. The amount is based on the total wages paid per employee.
Okay.
Any other questions? This is really sort of the last slide here. Danya has added in a link into the chat about the exact application form. So this is the application form that we work with First Fed on. And it's just a great example of all the information that we need to qualify you for ERC. We're happy to do so. There's no free of charge and no obligation inside of it.
Colleen? And Yes, go right ahead, Debbie.
I'm devil's advocate again here. I want to know where these funds are coming from the federal government. So
Yeah.
if we're giving businesses tax credit for withholding and matching funds for Social Security and Medicare, aren't we going to come up short later on down the line? You know, we're printing money, trillions of dollars a day. So where are these funds coming from?
Yeah, it's a great question. The official government answer to that question is that these are funds that are being paid out of the taxes that you've already paid. So an example is, unlike PPP, which had a set loan amount that it was going to give to small businesses, and that eventually ran out when a lot of businesses applied for PPP. Technically, ERC does not run out of funds because it is simply a refund of payroll taxes that have already been paid. But I hear you. The government is using this money right now. But on the other hand, the fact of the matter is that this is a severely underutilized program at this point. The government can't get people to really apply enough for this program simply because they haven't told anybody about it. They've done
Yeah, I think too, though, when we've done a bunch of presentations on ERC here, we had an attorney, a CPA, and Graham Ralston gave a great presentation with Lena Washke about this. Back in 2020, I think it was. And it's also very complicated because you have to compare one quarter over you compare like Q2 2019 to Q2 2020, you know, is part of that process. And then, but the other thing is, if you got a PPP loan, that money you used to pay your employees can't be considered in your 941. So that has to be subtracted out. And I do have, so Lena has a question here. Lena, do you want to ask that?
Thank you. I just wanted to know what your interpretation is related to the government shutdown order. When I've done a lot of research into this, I have found that it appears as though the IRS is being pretty narrow, and you have to look at it for each quarter. So if the government, you know, and what about a county shutdown order versus a state shutdown order versus the federal shutdown order? All of those, in my understanding, are looked at differently. So that would be my first question.
Yeah, no, it's a fantastic question. So once our tax attorneys get into the exact narrative of what the business went into, and a different narrative is crafted for each business's situation, it is narrow in the sense that we want to be specific and exacting about, you know, the exact circumstances under which we're applying for COVID. The most common disruptions to businesses during those time periods will be things like the partial and full shutdowns that were going on in your specific region during that time period, any supply chain interruptions, the limitations of your group meetings, even the inability to find or retain employees during that time period is a disruption in your business during that time period. The increase in costs of wages and goods during that time period, the reduction in goods and services, and obviously foot traffic during that time period, any interruptions to your operations related to any of those other issues, even the inability to travel or attend conventions during that time period is considered eligible during this, and especially any cut down in the hours of operation for businesses. So in this case, I agree, I would consider them narrow just because we want to be extremely specific about the narrative that we're crafting during this application. That said, I mean, every application that we put together is reviewed by a team of tax attorneys and CPAs that have reviewed that code, and really every one of our applications will qualify under a combination of those set of circumstances.
So what happens, because this is a great credit and it's very lucrative. I've worked with several of my clients to apply for and obtain the credit. But very few of my clients have been eligible. Many of them have not been because they're, just owner officers, those types of
Yes.
things. The other issue that comes into play is making sure that the credit and the PPP aren't used for the same period. So you can take
Yes.
advantage of the credit and the PPP, but you have to exhaust your PPP, which then may make you ineligible for the ERC because you don't qualify under those other rules.
Yes,
So,
that's absolutely correct.
but it's definitely a very lucrative credit for those businesses that are eligible. But I think that very few businesses are actually in our region, in our area, are actually going to be eligible for this credit.
Yeah, no, it's an absolute concern. Really, again, the risk here is that if you are eligible and you don't apply, then you're basically leaving that money on the table, right? But I mean, yeah, eligibility is absolutely an issue. That's why we don't charge a fee to qualify people. But no, it's absolutely right. If you have gotten PPP funds, then there's no double dipping inside of the tax credits that you've paid, right? So a great clarifying point.
So we got a question from Rick Dickinson, who works with the Center for Inclusive Entrepreneurship and works with a lot of small businesses. Rick?
Yeah, I just wanted to get a sense of the people who have applied. What is your current success rate?
Yeah, so in terms of the pipeline, so when we qualify businesses, the typical reason that a business would not qualify for the program right off the bat might be that they don't, as Linus alluded to, perhaps they don't have enough employees, or most of their employees are family members. So percentage-wise, that drops probably around 50%. But really, we try to let people self-qualify. We don't try to get people to apply if we know that they won't qualify. Right? We try to give that education up front. Going all the way through the end of the process, really what it comes down to is really the amount that you're going to qualify for. I mean, if we're talking about from the beginning of the application process all the way to receiving the refund, the typical attrition rate for us is about, it's about 25% of customers make it all the way through the process. But that's only because we offer the qualification for free. So we get a lot of people into the top of that pipeline. The top reason that they don't go through the process is that for whatever reason, they may, we're dealing with business owners, they get busy, they essentially go inactive from that application. And it's an intense process. We do ask for a good amount of documentation. So you sort of need to be a partner inside of this process in order to see it all the way through. It's a months-long process. Anything that we deal with the IRS is months long. But we're always there for anybody that wants to work and continue with the process.
And a follow-up question: how do you get paid? Is there a commission basis or?
Yes, absolutely. So there's a client success-based fee at the end. So after the Treasury Department, after the IRS has reviewed your application, and then after the Treasury Department has actually released the check to you, we then ask for our fee off of the fee that you gained.
Okay.
And it's a 25% success-based fee, and that covers the qualification. It also covers audit protection for any questions the IRS might have. We guarantee that for free on the back end, and it also covers just the entire sort of risk-free process that we offer.
Okay, so the exact percentage again?
25%.
Okay, great. Thank you.
So of those 8,700 or so clients that you are working with that have applied, what percentage of those have, and so I assume that's actually 8,700 or so that have submitted to the IRS or Treasury for the refund, and how many of those actually have received funding back?
So many of those are in the awaiting stage because it's about a 5 to 8 month waiting period. Right. We have not experienced a kickback from the IRS. The reason for that is because The nature of the filing is simply a restatement of the 941. So it's a 941X amendment, and the IRS is really just processing these as they can. So once they get to that stage, once they are with the IRS, at that point, we're essentially simply waiting for those checks to be released. There's very, very little drop off. Actually haven't heard of any drop off from that point.
Okay, great. So I know that you said you've got 3 years to modify your 941, your tax return for your payroll taxes. So some people are getting funding back from March of 2020 on that tax return. So that would be then 2023, March of 2023, that they have to have this modified by for just that quarter.
Yes,
is that right?
That's absolutely right.
And how does that work? I know it said, starting, I think it was March 13th but do you use the payroll taxes for that entire quarter, or just do you prorate it for Q1 2020 from March 13th till the end of the quarter?
I'm sorry, can you repeat that?
I think it was March 13th, the time frame that it applies to. I think it starts March 13th. I'm going to share screen on
Sure, yeah.
on the this one. Okay, here we go. This is the IRS site, and I think I put this link in the chat, but yeah, so it says period for qualified wages paid.
Oh, I see. Yes. Oh, no, exactly right. So when you file your 941 amendment, you'll actually need to file a separate 941X per quarter. So on the form itself, you'll identify which quarter you're applying for, and then you'll sort of put in all of your information for that exact quarter. I understand that.
Okay.
Exactly correct.
Okay. And I just wanted to share with everybody this screen. I'll zoom it out a bit. And I think the interpretation of this is really important that Lena was speaking to. The employer must experience full or partial suspension of operations due to government order due to COVID-19 during any quarter. So didn't the governor shut down our entire state essentially for a couple weeks in March? So what I don't get is, why wouldn't every business qualify that got shut down by the governor? Because of that, right? Because it does say or right here, or significant decline in gross receipts. But is there a potential that you think, okay, I got shut down, and so therefore I qualify, you apply for these funds, and then you get the money, and then you're told later on, no, that didn't qualify, you have to give us the money back?
No. So we've never had a situation in which it would be unfathomable for us to be in a situation where there was any money. I don't think I've ever heard about that for ERC, but a very valid question. So when it comes to, I guess, the definition of the shutdown itself, I guess really there's no situation that we've encountered where we'd be asked to get the money, especially because with our applications, attorneys are reviewing the application to not expand, but to clarify and specify the narrative under which we're qualifying. And we are using the criteria that we know that the IRS will accept.
Okay. Great. So I guess my question though, regarding the governor's shutdown order that happened in March 2020, does that meet the criteria of this eligibility requirement for employers? It
yes,
does.
Absolutely. And
so just by that, and was there a business in Clallam County that wasn't affected by the governor's shutdown order?
My opinion would be no. So this is the sort of pitch that I give, is that, you know, some businesses will miss out on this program because they think that they don't qualify under this certain criteria, especially because that or between those two criteria is a new or. It's a relatively recent like or criteria. But yeah, I mean, it's when the IRS built out this program, they intended most businesses to qualify for this program. And it really is an incentive for businesses that were able to keep their employees employed during this time. So, you know, this was an era where they were trying to give help out to small businesses because they were trying to keep people employed, frankly. And they want to do that by refunding your payroll taxes.
Mm-hmm, mm-hmm. Okay. Yeah, I think your point that 70 to 80% of businesses were expected to file this, and it's what, 10 to 20% right now?
Yeah, perhaps even lower.
Okay, okay. Do you know what the total amount was set us, how many billions they expected this would cost?
I don't know what their expectation of the cost was, but again, it's unique in a way, you know, from something like PPP that had a set loan amount. They didn't really set, there's no technical limit on this program. I'm not sure what they expected it to cost, but I'm sure even the government is a little bit disappointed in the underutilization of this program. It's why there's only 3 quarters in 2021 that are eligible, because they ended it in Q4. It's also why they kept on expanding the eligibility criteria over time, because so few people were using it. They're like, okay, let's try to get more people to use this program by expanding the amount of people that qualify. But even that hasn't had much of an effect on the number of people that have qualified. And I think it's a bit of an information issue.
Okay, okay. I also have one other spreadsheet that someone shared with me. So I'm going to go ahead and share that now for people. I think it might be helpful just for information standpoint. Let's see, can everybody see that? Okay, and I can try to save this and put it in the chat so people can download it. But it's so it's got some information directly from the IRS site, and then here's the how it works page of this. So an example from this is for this is why it's so complicated. You got rules for 2020, you got rules for 2021. And so here's an example where employee number one earned $18,000 in 2020. Poor person, didn't make much money. $5,000 was attributed to the PPP loan, which leaves $12,000 to use, but you can only use $10,000. So $2,000 isn't eligible, and you only get 50% of that. So your credit's $5,000. And then in 2021, that poor employee only made $8,000. This is a terrible example, but the employee only made $8,000 in Q1 in 2022 or in 2021. $2,000 was attributed to their second PPP loan, which leaves $6,000 to use, but you get to use 70% credit of that. So $4,200 for Q1. And then they've got another example here where a different employee earned $8,000 in 2020. $3,000 was attributed to the PPP, which leaves $5,000. You get to take 50% of that. So you get a $2,500 credit. And then the next in 2021, that second employee earned $15,000 in Q1, and $5,000 was attributed to the PPP loan, which leaves $10,000. Your credit is 70% or $7,000. So, and you add all these employees up over all the quarters, and then the maximum is $26,000 per employee, and then you get money back from that. And then here's some information on how to apply. Family members and owners are not eligible. PPP loan, date of receipt, and how much of that was payroll. And then quarterly summaries for Q1 to 4 of 2020 and Q1 to 3 of 2021. And then your 941 forms for those 7 quarters. And then the program stopped with Q3, but you're eligible to amend the 941s for 3 years. So that gives you till April 23 for Q1. And then it's a sliding scale where it expires after that. So I will go ahead and try to download this to the chat box so people can pull it up just as a reference document as well, and something you can share with your businesses and clients if you're interested in doing that.
Colleen, I love how you have all the details and examples, and I think it's a perfect reason why we are partnering with Innovation Refunds, because they're the subject matter experts, along with our local bookkeepers, our CPAs. You know, Lena's been an amazing resource and a lot of information, attorneys. We're not the only ones offering help and support in this area. We just want to get the word out. And because there are complexities to it, it seems simple at the surface, but there are complexities to it. It just apply, right? Like, what's the worst case scenario that you spent 12 minutes completing an application or talking to your CPA or someone that you didn't leave the money on the table? We want to make sure that you have the opportunity to these funds. And so that's what we're relying on people like James and his team to help us and help you guys navigate, so you don't have to get into the weeds of all that.
Right. It is. I'm just, that example shows you how complicated it is. So I'm sure there are some business owners that can do it on their own, but, and I think I'm fairly smart, but I'm not going to do it on my own. You know, someone that does this over and over and over again is very capable to do this. I mean, once they've done it once or twice or 10 times, they are pretty darn good at it. And I see a value certainly with James and their tax attorneys reviewing this. But we've got Judy Jones locally that works and does this, and she charges 1%. So it's a pretty inexpensive process, but you're also not getting the tax attorneys review, and I can put some of her information in the chat as well. And I know I asked Lena previously, is this something you could take on for other businesses? And she shared, no, I tapped out, basically working for her businesses. But there are a lot of different options, and I want to make sure, the bottom line is we just want to make sure everyone is applying for this that might be eligible, because we want that money to come to our community. And if you're feeling bad about it, go donate to your favorite nonprofit, your favorite charity, to help out our community. That's what I've said to people that that are worried about, applying for PPP loans and philosophically have a problem with the government spending all this money. But the thing is, they're spending it, and we want it to come to Clallam County, so into our local businesses.
Absolutely. And I think I'm really proud of First Fed to be partnering in this. We're one of only 2 banks providing this solution to businesses. So I think that's pretty cool.
Yeah. So Lena had another question, it looks like.
I was just wondering if you have heard that that the funds are gonna run out. And Rick made a comment as well saying that he didn't think so. I have seen, what's been interesting for me is there's been a lot of promotion about this ERC credit from a lot of different companies online. And so I was wondering why this all came up. One of those, or why it's become so popular, other than the fact that it is a great credit. And I think that all businesses should take advantage of it and see if they're eligible. but I have seen something the other day that said, do it now, the funds are going to run out, but it could be, I don't believe that
Yeah.
that's the case either. Is that your take, James?
Yeah, so first of all, yeah, there are a lot of new companies out there. My company has been around for more than a year. So we were one of the first movers inside of the space, just from the experience of my CEO having applied for this refund. And he was like, wow, I got all this money from this program that very few people know about. So we are seeing, more and more players entering into the space, sort of trying to get their operations up and running very quickly. And trying to put a little bit of fear out there with that sort of language that the funds are going to run out soon. The real story is that because ERC was so underutilized, the administration technically ended the program in Q4 of 2021. So the program has already expired. And there's no set pool of funds that are currently running down, but the program is already expired. So really the time clock that we're running out on that Rick sort of described here is that those 3 years to amend your previously filed payroll taxes. So that's really the clock that we're running up against right now, not the amount of funds that are being claimed. Nobody's in competition with each other for the amount of money that's being claimed, but it is really a timing issue because after 3 years, you do lose the ability to amend your payroll taxes. It's a great question, and be careful of the language that you see out there. They're trying to increase urgency, which it is urgent. Apply as soon as possible. Walk quickly, but it's a timing thing. Exactly. I mean, you want to make the best decision. So I'm not going to say run or sprint.
Yeah.
Really, again, I mean, the most important thing to me is that, as everyone has said, we want this money into the hands of our local communities and our small businesses, not the government, which is we're just holding on to the money, right? So to me, that's the most important part. However, we can get that money into the hands of our local communities.
Mm-hmm. Okay, great. All right. I am putting also Judy Jones's information in the chat as well. And so she doesn't have the sophisticated online process and everything, but it is, and you don't have a tax attorney review it. And she charges up front hourly, or no, I'm sorry, it's a 1% fee. So that's another option there for folks. Where are you out of, James? Where's the company located?
Yeah, so I live in San Diego, California. My company is actually headquartered in Des Moines, Iowa. And
okay.
Yep, and we have some executive leadership also in Laguna Beach, California.
Okay, gotcha.
Yeah.
Gotcha. So a nationwide company. That's cool.
Yep.
Well, great. Does anybody have any additional questions? I do want to add that the Working Washington 5 grant is going to be rolling out shortly, and they're trying. And I know that you had to be in business by December 31st, 2020 in order to qualify for that grant, for those of you that have been waiting. And we're going to have a lot of information on it. We've been working with their team again to help, we'll give them input at the Department of Commerce as to what how they should be structuring it. And so we'll get information out as soon as possible. They're going to be using Submittable again to process the grant applications. And now that it's not an emergency time frame and the state government has to go through all their really arduous processes, so it takes forever for them to get RFIs, RFQs completed, and that's what's taking so long. Whereas before they were able to, the governor had declared an emergency, so they could just run through that quickly. So I really want to thank James and Danya and First Fed Bank for bringing this forward and being available today to talk about this. And yeah, I think it's something that our entrepreneurial and business ecosystem really needs to work on getting the word out so that people can go through the process and get these funds for our local businesses. And so thank you for being willing to join us today, and also First Fed for making it a priority, and going out on a limb to partner on this. Thank you.
Well, thank you for having us today, Colleen. For anyone follow up, your branch managers, you know, at your local branches can help you, direct you on how to apply. I've dropped the link in the chat. So thank you for the time today and the questions. They were all really great and engaging.
Yeah. Well, I think we'll get a lot of views on this. You know, this will be a resource to people. If they want to learn more, they can hear and listen to this. We'll have it posted on our website, Choose Clallam First, and then a cross link on clallam.org by the end of the day. So I think I'm going to end